Put my water in like a Marco Rubio position. There's like an old political joke. I don't know. That was like what, 4 or 5 years ago now, 6 years ago.
For some more innocent time.
Yes, from a much more innocent time. More civilized time. Hi, welcome. I'll introduce myself a little bit later, but first, how many of you is it your first time at a Code and Supply event? Okay, cool. We've got some noobs. Welcome. The rest of you, welcome back. How many of you is this your first time in this space? Cool. So, probably the big thing going on in the Code and Supply world is that we have Uptime Conference coming up in just a few weeks. I think we're at 5 weeks, oh God. We'd love to see you there. I know some of you I've seen buy tickets. The rest of you, buy tickets. It's going to be a good time. We've got some really star speakers coming in to talk about their stuff. And we really hope to see you there. Anything else that's a kind of a business order thing?
No, not tonight.
Okay. I'm usually the one doing the hosting. This is only the second or third Code and Supply talk that I've ever given. I think the last one was probably about 2 years ago, and I talked on RoboCop. So this is a completely different subject, completely different topic, completely different focus of everything, but it's still kind of a geeky thing. Make sure my thing's on here. We're talking about plain text accounting. As the name implies, it's doing accounting with just good old-fashioned text. Specifically, doing it with the Ledger ecosystem. We'll find out a little more about Ledger as time goes on. I'm Colin Dean. I work for a company called Arcadia Healthcare Solutions, completely not related to the topic of tonight's talk. We do healthcare analytics on electronic health record data. Just put up some job postings today, so if you're interested in working in healthcare and doing some crazy big data stuff for healthcare, please do check it out. You can see the links in the jobs room on the Code and Supply Slack. As I alluded, I'm usually hosting these events. I've been involved with Code and Supply since its inception about 3.5 years ago. My experience with Ledger goes back several years. I started using it in 2012 and 2013, 2014 to do time tracking. I needed a way to keep track of my time in a way that was much better than the really bad system that we were using at work. I needed something to augment that system where I could keep track of time at a much lower resolution. I wanted to keep track at 6-minute increments, so I could have an even 0.1 hours. Our time tracking system at work didn't allow us to do that. Also, those of you who know me and can read my shirt know I'm involved in Bitcoin, and I got into Bitcoin trading online, over the counter, and I used Ledger to keep track of my trades as a way of making sure that what was going in was going out, and I was able to track how much money I was actually making, so that inevitably when it came time to report it for tax purposes, I could do that with some reasonable veracity. Last year, I started using Ledger for tracking my pay time off. As you'll see later in the presentation, that's pretty easy. Days are just like dollars. You can use it in that same regard. So I set up the system where my workstation would email me every Tuesday at 3:15 p.m. with my current PTO balance, the amount of time that I had left to take, and also would project out, if you need to take this amount of PTO in this amount of time, or you're gonna lose it. Unfortunately, it turns out that wasn't really enough of a reminder because I barely took any vacation in 2016. And some IBMers in here know how much of a pain that was whenever I left IBM a little bit ago. This year, I committed to using plaintextaccounting for my own finances entirely, for everything that I do. I had been using this spreadsheet format that I came up with in 2007 that was largely budgeting, but largely forecasting. Like I had one sheet that was a budget, and the one that I really paid attention to was a forecasting sheet where I had transactions listed, and I could tell you based on repeating rows in that how much money I was going to have at the end of the year. And that's what kind of gave me solace and made me confident that I was going to have enough money to pay my bills. Also, I was doing that for the Code and Supply Scholarship Fund. We needed some kind of an accounting system. We're geeks. Ledger was the best way to do that. Throughout the talk tonight, I'll be talking towards these 5 points. First of all, of course, why do we want to do accounting? What is accounting really? Simply put, you want to know how much money you have available at your disposal. It's a good personal finance, good responsible personal finance decision to know what you have. Maybe not necessarily to the dime in your head or to the penny what's in your head, but probably to at least, the hundreds, maybe the tens is a pretty good idea. If you're working on a smaller budget, working on a larger budget, maybe the 10,000s. Maybe if you're a day trader, you're doing in the 100,000s. I don't know. What you have is a combination of the money that you can access easily, such as what's in your wallet, your bank accounts, what money others owe you, things that you're to be reimbursed, or loans that you have credited to others, as well as what money you owe others. So your credit cards, mortgage, vehicle and student loans, things like that. Add all that together, because generally what you owe others is a negative number. And then you get what you have, your net worth. The benefits of tracking are really these. It's knowing what you have across a variety of accounts that you may have. A lot of people have one checking account. Some people have two. I have 6, each with very specific purposes. So I need something like this to tell me what's in those accounts without necessarily having to go to 6 different websites to check those. You also want to know how much you had in the past. This lets you go back in time a little bit, make sure that your numbers agree with the bank's and that they didn't flub a deposit or accidentally take out money from your account instead of somebody else's account. You also want to know what you owe others and how much you are owed. If you know these things, sometimes you can see circular dependencies and know, hey, I owe this person $100. This person owes me $100. Maybe I can just say, why don't you just pay him $100? And you've solved that problem. Most of all, you want to know what you can spend. That way, if you're out shopping, you can know, okay, I'm going to buy this TV on a splurge. I can actually afford it. If you run a business, you're probably legally required to keep records of some sort. Whether they be paper records, electronic records. Do electronic records because it's a whole lot easier for everybody. This is called bookkeeping. And people are paid a lot of money to keep a company's books. If you make enough money as an independent contractor, or even as a small nonprofit, you're probably paying somebody to do this for you. Probably paying a CPA, certified professional accountant. If you don't do this, you might wind up penniless, or at least struggling. How many of you recognize this character? A few? Okay, almost everybody. Good. Does anybody know his name? I had to look this up. I kind of remembered it. His name is Rich Uncle Pennybags, and he goes back into the 30s when Parker Brothers unveiled Monopoly. First of all, let's talk some terminology. Do we have any accountants in the room? Anybody with a formal accounting training? One. Great. Please bear with me on terminology. I'm a student of many disciplines. Accounting is one of them. While I've been keeping books for myself and for my organizations for a better part of 18 years, I do still trip up sometimes, especially in terminology. First unit here, first term we want to know is an account. This can be your wallet, bank account, credit card, your investments, a line of credit, an expense line, some particular thing you want to focus on for expenses, equity holdings. We'll get into that a little more later. There are 5 common categories of accounts, at least in personal finance, because we're focused on personal finance tonight. Business finance gets a little crazy, and I'm not too good at it. Well, at a certain level. First, there are assets. These include things like bank accounts, your wallet, investments, and your loans to be credited, loans you've given to somebody else. Next category is income. These include things like your paychecks and your and your gifts received and dividends and interest that you earn on your accounts. Third category is expenses. There we go. These include things like groceries and taxes and gifts given and donations. Fourth, we have liabilities. Liabilities include things like your mortgage and credit cards, student loans. My remote seems to be dying. And loans that are owed to you. These are the 4 main categories you're going to be working with whenever doing anything with Ledger. The last one is equity. And one phrase that I heard explained to me when I was first getting into Ledger was, for everything else, there's equity. This is very commonly used to capture, of course, opening balances whenever you want to start actually tracking things, whenever you are rolling over your finances from the previous year. But it's also commonly used as a bin for rewards. You get cash back, or you can keep track of airline points, things that aren't really necessarily money, or are not necessarily taxable to you when they come in, because generally things that go in income are taxable. The other thing that I use it for a lot is when I just want to throw my hands up. I just recently did a full balance of everything, and I was off on 3 credit card accounts by a total of like $80. And it was simply not worth my time to go back through several months of statements just to find $80. For $80, round it off, we'll just start it anew. Credits are adding value to an account, incrementing it, while debits remove something from the account. A transaction is the result of associating credits and debits with some kind of a timestamp, and probably a payee is what we really call it. Whether that be the actual person you're paying, whether that be a description of the transaction, transferring money, etc. A transaction contains credits, which increase the value of an account, and debits, which decrease the value of another account. Most transactions debit one account and credit another. But transactions can also include multiple credits and multiple debits. The number 1 rule is that everything must balance. This means that the sum of the debits and the credits must be 0. If it's not, it's not valid. If you take $100 from a collection of accounts, you must add $100 to another set of accounts in order for the transaction to be valid and balanced. The number of credits and debits need not be equal. If a bunch of people, say your roommates, maybe your coworkers, owe you money, then you might record it as one transaction, especially if it happens all at once. I know I'm one of the first people to volunteer to take the bill whenever I go out to lunch with a bunch of people. I'm okay with people paying me back. So I'll hand my credit card to the waitress so that she can go take that, and then I'll pass around a receipt, and people will start sending me money through Venmo. And when I go record that in my ledger, I'll record all of that in one transaction. No double entry accounting program will allow an unbalanced transaction. If it does, it's not a good program and you shouldn't use it. So let's talk about some other programs. Make sure that we understand what is out there in the market. Of course, there's QuickBooks. How many of you have heard of QuickBooks? Probably just about everybody. It's the most widely used accounting program. I think it was TurboTax that the new Treasury Secretary used to do his whatever. It basically has everything you need for running a business built into it. Yeah, there's a personal edition that doesn't have some of the fancier features, but it's still basically a business tool. It's kind of expensive. I think it's like $50 a month, something like that, at least, if not a straight up front cost of a couple $100. But it runs on everything: desktop, smartphones, the web, whatever. Mint is another great tool from Intuit. I use Mint. It will automate the movement of data around. How many of you know what Mint is? Do I need to go into this? Just about everybody. It relies a lot on manual curation in order to fix the automated imports. I mean, how many of you who use Mint spend a lot of time fixing things in it? Anybody? Yeah. I did that for about 4 years before just kind of throwing up my hands and saying this isn't really worth my time. I still do use it for its large transaction notifications. It's really nice to know, like, hey, payday's here, or like, hey, somebody took out $3,000 out of your checking account. That shouldn't happen. You need a budget, commonly abbreviated as YNAB, is another tool. It's very much aimed at the personal finance market and was kind of a revolution when it came out, because it was also the first non-game available on Steam, the game store. Its focus is primarily on budgeting, not on ledgering. It's very batteries included for those two tasks, and focuses more on building good budgeting habits than it does on tracking transactions. YNAB is presently subscription-based, something I just found out, and so I think it's like $20 a month for a web and mobile version together. There are some free things out there. Open source tools like KMyMoney and GNU Cash do a pretty good job of this. There's a mobile version of GNU Cash that was launched a couple of months ago for Android. GNU Cash was actually my introduction to double entry accounting. I used it for a couple of months, a very long time ago, but I gave up on it when I changed from Linux to macOS, and there wasn't a macOS version of GNU Cash at the time. I think there is now. Then, of course, there's Ledger, the whole subject of this talk. Ledger itself is command line only, but the ecosystem around it is not necessarily command line. In fact, you can use Ledger without really having to touch the command line, as long as somebody does some of the setup for you, the initial setup. However, the core goal will always be a focus on command line. That's the market that Ledger is trying to fill. The responsible command line geeks, Unix people that want to be able to manage their finances. Most of all, of course, it'll always be free. As you can see from this ridiculous list, there are a host of other tools out there that can do finance. These are all open source tools. This is straight out of Wikipedia. Ledger is here, where you can see a whole lot of no's, because it follows the Unix philosophy. Do one thing and do it well. Actually, it does a couple of things pretty well because it does not only double entry bookkeeping, but also time tracking. But the time tracking was a thin veneer on top of the double entry bookkeeping system. So why do you want to use Ledger? Why should you use Ledger, really? By entering each transaction manually, you can spend that money again. Think about the kind of like personal struggle you go through when you're handing somebody money. This puts you through that again as you're typing it in. And this way you become intimately familiar with every transaction that happens, whether you're handing over cash, you're fumbling to get the EMV chip in the right way the first time, or you're clicking complete order on Prime Day. If you really hate the manual entry of data, there are lots of people who have automated various bank exports, push button, receive transaction logs, and you've basically got a mint task ahead of you of fixing transaction names. Go for it. I don't like to do it because I want to have that intimate relationship with where my money is moving around. Ledger lets you track literally everything. Everything that can be enumerated can be tracked in Ledger through its commodity system. US dollars are just a commodity. Bitcoin is just a commodity. VStacks, Vanguard Admiral shares, is just a commodity. You want to put your house in there? Go for it. If you've got multiple houses, maybe, hey, go do it, whatever. You can also have multiple commodities in a single account. So maybe this is really good for a brokerage account, where you want to express that you have cash in that brokerage account as well as stocks. Or maybe you've got a cryptocurrency exchange account and you want to express that you've got like Bitcoin, Litecoin, Dogecoin, ad nauseum. Ledger is just text. That's the big strength for we as software folks, as engineer types. It's just text, and it's a program that reads that text. It almost sounds like an elementary computer science program, computer science education program, really. It's fast. It can process literally tens of thousands of transactions in a single second. It uses very little memory because it just doesn't stay loaded in RAM. Figure you've got a browser tab open with QuickBooks, it's going to be using like a gig because you're using Chrome, and Chrome is a memory hog. Or you're using a desktop application that has its own memory requirements. If you're somebody that cares about RAM, well, this is something definitely for you because it's only using it for a very brief period of time. And because it's all text, it's processing it very quickly. And I don't think I've ever seen Ledger use more than about 100 megabytes of RAM. Very efficient. Lastly, the records are about as raw as you can get. A CPA who is expecting QuickBooks might give you a little bit of a leer whenever you hand them a text file full of transactions. But most of the people that I've taught Ledger, I've taught them how to use it in about a half an hour, and they were doing things just as strongly as they could in QuickBooks or you need budget, whatever. And because you're a dev, you can probably automate just about everything. The text format has some very simple rules, so it's very easy to parse, and more importantly, very easy to construct. If you want to automatically build these files, build these Ledger files, you can do it very quickly, very easily. And I've built several scripts that actually take advantage of that, converting from crazy XML format to a Ledger format in order to better understand how money was moving around the system. The text format really lends itself to versioning. This means you can stick it in Git, you can back it up, you can collaborate with others. And how many times in the future are we going to see potentially finance geeks doing pull requests to put transactions into the record? That'd be pretty cool. Lastly, the ecosystem really lends itself toward automation, as I've alluded. So Tools like make are everywhere. I can type make and I can see my budget, or see my entire balance sheet. Ledger has a few key things that are a part of its format. First and foremost is the timestamp. A timestamp is going to be in a very specific format. Payee is just a string of text. You'll have a list of accounts, either credited or debited, depending on what you're intending to express, and then an optional comment. Sometimes the comment will be on the transaction, sometimes the comment will be on accounts, or really lines within that transaction. Here's an example of a transaction, and I'll let you soak this in for just a little second. I do my Marco Rubio thing. Let's walk through this. Here's the date. It's always in ISO 8601 format, year followed by month and date. Ledger and some others allow you to use a slash instead of a dash, but most people use dashes. Here's the payee. I like commonplace, and I was there whenever I was working on this slide and some others. The payee can be a note about the transaction, or it can be who it was paid to, who was paid from. Something that if you're trying to find that transaction, you're going to find it. And something that if you want to especially track multiple instances of that transaction or multiple engagements with whatever you're doing, then you want to keep your names uniform. This is the account label. Sub-accounts in Ledger and other programs are separated with colons. That way Ledger can build a tree structure to show you how these accounts nest within each other. Here, I've created a sub-account to track my coffee spending. Sometimes when you spend a lot of money on coffee, you need to do that. I could also theoretically credit the expenses restaurants account if I just wanted to spend something on just a generic restaurant. This is the amount. It's a credit because it's a positive number. Or really, because it's a positive number, it's a credit. Note that expenses are credited. This is because accounts must be deducted when you're spending money. You're taking money out of your wallet and you're putting it into an expense. If you had access to the whole world's financial system, maybe instead of saying this is an expense, you would say transfer money from assets cash wallet to commonplace coffee assets cash drawer. Something like that. This is another account. It's advised to separate your assets into a few different categories. Cash contains your wallet, your bank accounts, and anything else that is liquid and easily accessible. Investments contains your retirement accounts, your stock brokerage accounts, and maybe some stock what you got whenever you gave your friend some money to go work on his Facebook killer app. Reimbursements is the last major one, and that contains amounts that are owed to you, such as when you book thousands of dollars of company travel on your own cards to get the reward points. Lastly, here's the debit for the transaction. Now, Ledger's pretty smart. It doesn't necessarily require that we give it all of the information that it needs. This signifies this particular structure where we've omitted one account's amount signifies to Ledger that any imbalance in the transaction should be assigned to that account. Ledger would see this transaction and know that $3 needs to be debited from something in order to balance the transaction. Because we didn't say something, Ledger will just know, well, okay, I know that you mean to put it here. This saves us a little bit of typing. Also, it lets us do really complex transactions where we've paid a service, paid a vendor, and you want to do line items for various things that are on your receipt, but there's one category that contains a lot of stuff, And you don't want to have to break that out as individual items as well. Buying groceries, common thing to do. So let's change it up a little bit. The next day, our hero gets another coffee. Now she pays with her credit card, Costco card, and records a comment saying cold brew. For some reason, that was interesting in this transaction. Credit cards are a liability because it's money that you owe somebody else. I advise creating sub-accounts for an individual credit card, even if you have only one, so that in the inevitable possibility that you get another one, you don't have to go back and change your entire history. Excuse me. So a few days later, it's payday. Income goes into a well-named account, generally income and maybe the company that's paying you, the source of the money. And then you can credit your checking account or your savings account, wherever the money's going. But think for a moment, why is income debited? Again, if we had access to the entire world's global financial system, then we would say assets, cash, or Spacely Sprockets, assets, cash, bank, checking, debit, 2000, credit, coffee lover, assets, cash, bank, checking. Sounds great. The next payday, she wants to move some money around. So you can very easily express that. Same accounts. I like to use transfer to savings when I'm doing that. Transfer, always say where you're transferring it to, because that's a little more interesting than where it's from. Maybe sometime in the next paycheck, our hero wants to kick it up a notch. She decides that she wants to track the taxes paid. To keep things uniform and to save herself from having to figure out the amounts, she probably goes back and edits all of her previous checks and puts this information in there in order to get a good view of the entire system, the entire taxes paid. So we've gotten a good overview of how the structure works. Let's actually see what happens when we run it through. Avoiding the remote. Now that we understand the format, let's see what we can do with it. Our first example is some transactions from the things that we just looked at. And we can see that there's a single expense, coffee run. There's a payday, and there's a transfer from checking to savings. Running ledger, this is what we get. Literally the output. If we invoke ledger with a simple balance command, we can see the value of every account, even with the nested accounts broken out. You can see that this indentation here is where something gets nested. We can also see a list of accounts. This is useful for checking for typos to make sure that you've not called something consumables instead of consumable. Plurals are the bane of any person doing this. This is also very useful if you're not using strict mode. Most Ledger and Ledger likes have a strict mode where you can't just arbitrarily create accounts. You have to expressly say, I want to create this account or open this account. If you don't have that on, then you will inevitably go through your records and find plurals all over the place. Payees is a similar command showing all payees in the record. Also for similar purposes. Maybe you want to see, make sure that you've not had any typos in there. Register is the last one. It outputs the last major command, and it will output by default a list of every transaction with its credits and debits and a running total of that particular account, a running balance. There are a lot of other commands, but especially these four are the ones that are most commonly used. This is a little bit more advanced balance output from my larger example. wherein taxes have been tracked. So, and I did that so that you can see how much more nesting goes in there. Some ledger likes, one of them, abandon is the one it's called abandon, the one that I use most of the time. Make this view a little bit nicer by putting some box drawing characters in there. Make it easier to follow down and see where the tree actually is. Balance and register alone aren't really that useful. They show you the current state of now. But they don't show you questions. They don't show you reports that are things that you would talk about. If you deduct income from expenses, you can see your cash flow. Positive cash flow means that more money is going out than coming in. And negative cash flow means that you're saving money. Having a positive cash flow isn't necessarily bad. It just means that you may have had some emergency expenses, or maybe you've been saving up for something for a long time. Our example transactions show a surplus because the total is negative. You can see the carets in there because Ledger uses a simple regex-like syntax in order to match certain accounts. Deduct liabilities from your assets, and you've derived your net worth. Is it bad for this number to be negative? No. If your net worth is negative, it's not necessarily a bad thing. It just means that you owe more than you have, and you're probably still paying on your mortgage, your student loans, a variety of other things. But don't worry, you're not alone. Because as of 2014, 50% of Americans have a zero net worth or less. And here's what that same ledger file looks like whenever we do a net worth report. Next, let's talk about commodity management. These are some examples of what a commodity-specific transaction might look like. Notice the explicit use of USD here. In previous examples, I didn't give it a commodity. I didn't really want to. I didn't need to. But when you introduce other commodities, you have to start explicitly saying commodities. Otherwise, Ledger will yell at you. I actually found that out the hard way today. I had never hit that problem before. When you're trying to decide what commodities to use, I recommend using the 3-letter abbreviation for any commodity, for the currency, rather than using a dollar sign or a euro sign, pound sign. It's just easier to read ultimately. I find it easier to read. It's also more widely supported. Bean count is another alternative to Ledger, and it only will allow words. It won't allow symbols. The novel expression, the thing that's different from the previous transactions we've looked at, is this amount VTI at amount USD. These transactions say debit the checking account in the amount of $1,000 US and credit the Roth IRA with 8.03535 shares of VTI at a price of $124.45 US. Ledger doesn't know that those are shares. It could think that you have 124.45 shares of USD. Shares doesn't matter here. What it just means is we have a number and we have our units. If you remember your physics class, you got a number, you got a units, you've got something. The top transaction says how much to debit explicitly because we have everything there. And the bottom one leaves that off and lets Ledger figure out how much we actually wanted to debit. For things like this, I don't recommend leaving off something. You want to be explicit and say exactly how much was deducted. Ledger allows us to express pricing in a price database. It allows second resolution. So if you're a cryptocurrency person and you want to execute, or a day trader, and you're executing trades quickly, you can at least get 1 second resolution to check how much your pricing is changing over time. However, for long-term securities, it's by far best to use the market close, the daily market close, if you're just tracking your retirement accounts. Please do note that these are not real prices for VTI. I started using real prices for VTI, but then the ups and downs weren't enough for me to show you any difference. Because I did actually want to show you a difference. We use a very slightly different command to generate our balance report. Note we are providing the location of our price database. We've shortened the word balance to just BAL. Ledger will figure that out. We've used -V. -V says give me the current value in my default currency of the accounts that of all accounts. And then we've said give me a report ending on July the 2nd. This is non-inclusive. So what we're seeing is all data that came in as of July the 1st. When I run it again a few days later and updated the price database, you can see a very small value change. That zero sum from here is gone because we have a gain. $10. Yay, we made money. A few days later, we have another gain. Great. Ooh, we have a pop. Uh-oh. It's going down. You're not going broke. It's just a down day. So Ledger is a very powerful accounting tool. There's a lot of these features that are up here are ones that I just don't have time to talk about. I could probably go on for several hours talking about all of these. The ones that I like to use a lot are virtual transactions, where you can ledger again inside of an account. Nonprofits will use this to have funds, directed funds. I also use balance assertions when I'm using Ledger, and then that way you can more commonly or more frequently say like the balance should be this amount, and then it'll tell you, hey, the balance isn't this amount, you're off by 20 cents, and it's on you to decide if you want to go find that or throw up your arms. I like throwing up my arms. Not too much though. The three other features that I want to talk about: budgeting, forecasting, and timekeeping, of course. Budgeting is a feature that I haven't used a whole lot in Ledger itself because I know my budget well enough that I don't feel that I need to. It's probably dangerous. You can do budgeting by declaring periodic transactions. And I'll show you how to express that next. These periodic transactions can execute daily, weekly, monthly, yearly. And then you can use some other command line flags to check the data against your budget. Check like your real expenditures against budget. So given this budget stanza at the beginning of a ledger file, we can see this lets us express how much money we want to spend in these certain categories, or really how much credit we expect to see per time period in these accounts. Note that assets at the bottom doesn't have a number. This is because we're saying that we expect all of this money to be credited to these accounts, and we want Ledger to figure out then how much needs to be debited from assets in order to pay these. So given these transactions and that budget, we get this result. Can everybody see this? I know this is probably kind of small for those in the back. We had a couple other commands to our command line. We had the monthly tag, and that gives us things in a per month view. We say register because we want a list of all the transactions, and then we say add budget. This means that we're going to compare our real transactions against our budget. And then -P is a period. A period is very flexible. You can say last year, and that's a valid period. You can say a month and a date, a month and a year. That's a whole lot easier than saying start here, end here. important things here that I want to highlight are highlighted in red. Notice first that Ledger figured out what kind of assets we need. This is how much money we need in order to meet our budget, assuming that we use our entire budget every month. You'll see that, or remember that our transactions didn't touch gasoline. So our gasoline budget of, where'd it go? $120 there at the bottom. Didn't change. Still $120. We spent $3 on coffee, so that's down by $3. We spent only $580 of our $600 mortgage budget, because sometimes you want to spend a little bit more on that mortgage. So we have $20 left in the mortgage. Maybe that can be reallocated to something else. Maybe your utilities went over. That's on you to decide how you want to do that. Forecasting will apply periodic transactions until some condition is met. Generally, your account is empty. I find Ledger's forecasting format very difficult to read. I don't understand it very well. I haven't used it a whole lot. So maybe next time I do a plain text accounting talk that's like more advanced usage, I'll get really, really deeply into it, and I'll really grok it, be able to explain it to you. Lastly, timekeeping. As I said at the beginning of the presentation, this was my first introduction to Ledger. I didn't even use Ledger for tracking money until about a year after I started using it for doing time tracking. I kept my time in this format for about 2 years. It could get very verbose at times, and very sometimes long to type, but it was precise, horrifically precise. What this does under the hood is simply creates a special commodity for time. Think of it as just a commodity that is an H for hours or for minutes. But it will also insert into the ledger the ability to move from time unit to time unit. And that's something else you can do in Ledger is think of how many of you have played a video game where you had like copper, silver, gold, platinum, and there was kind of a nested currency system, or think like the metric system. You can express those various, the metric system is a lot easier. Let's go the imperial system. And you have all these crazy measurements. You can express those in Ledger and it'll just figure it out. That'd be a really cool demo, just to show like a transition of like cups to gallons or something like that. So here's the balance for that file. You can intermix timekeeping records with your financial records. I don't think that's a good idea. I think from a management or a maintenance perspective, it's not a good idea. Here's the balance for a format that's very similar to what I used at that job, where I had 3 categories: away, billable, and non-billable. We had to track all of our time, from every hour that we spent working during the day. So this was really useful for me because we had a lot of meetings, and I was able to demonstrate, because I kept good track of my records, that I was spending about it was like 18 hours a week in meetings. So that came in really handy whenever I made that assertion. Yeah.
Can you add a percentage to this at all? Like your away time there might say whatever 30%.
That's a really good question. I don't know. That'd be a very interesting thing to find out. I think it can, because I know there's a mode where you can do percentage of assets. You can get it in like asset allocation, where you can define commodities to be a part of a certain category. So I'm pretty sure they actually can do it. There might be a little bit of finagling to do it for time tracking. And here's what happens when you run register on the time tracking records. You get a really good view of what happened each day. You can also list this as daily, monthly, whatever. There's a few other features for Ledger. It has a crazy powerful query language where you can say, show me only transactions over this amount or under this amount. Or you can match on payee, you can match on account name, you can match on dates. It's all over the place. I don't really use it a whole lot. I'm pretty good at just using balance and doing dates. Just what I use it for. There's also Python integration where you can write functions in Python that generate transactions. You can get it at ledgercli.org, ledger-cli.org. The docs are super wonderful. A lot of this talk was generated using the documentation, not generated, but inspired by reading the documentation again for the 1000th time. They're really thorough, and they've got a lot of great examples of how to use every feature. Sometimes you'll have to go read the tests for the system, tests for Ledger, if you're getting into something really advanced. I had to do that for time tracking, but the basics are all there. But wait, there's more. There's a whole ecosystem around Ledger. We call this the plaintextaccounting ecosystem. The kind of a hub for it is plaintextaccounting.org, which is this beautiful thing. It's very plain text. For good reason. It loads very quickly. The site curates a lot of recommendations on tools for importing transactions from banks if you're not wanting to do the manual entry thing, or for doing manual entry a lot easier with things like syntax highlighting or a quick command line editor that's able to do batch completion on accounts. Add a single account in a single command line. It also lists some of the discussion groups that started around it. There are some generalized guides for doing certain tasks and working with most of the other ledger likes in the system. Many have existed over time, but these are the ones that are the most active right now. Ledger at the top is the one that I've been talking about tonight because it's the kind of the original tool, I wouldn't necessarily say the most powerful of them, but it is the reference implementation. I tend to use abandon down towards the middle because it's written in Scala and it generates reports in the formats that I like. It's kind of canned reports that it can do. But it doesn't support commodities yet. It only supports one currency, and that's frustrating. Bean count is meteorically rising in popularity recently. And a lot of that is because of its user interface. This is a tree map of my own expenses for 2017, rendered by Fava. Fava is the UI for Bean count. I just started using Bean count and Fava because, and what's interesting about that, Abandon can't output ledger format for everything. It can't just kind of like resolve aliases because it allows you to do account aliases so you don't have to type out the whole account. But it can't just output that to ledger format. It will, however, output its own custom XML format. So I wrote some XSL that will read that XML and spit out some ledger. And I did that in maybe 20 minutes. It was super easy because the ledger format's super easy to do something with. You don't have to have a JSON parser, no YAML parser, no XML. Well, you have to have XML to read it, but this crazy extra format. But Ledger itself doesn't need anything special. Import it, voila. I commented earlier that it wasn't until I was just staring at this slide that I realized, wow, more than half of my expenses are taxes. It's the green and yellow part over there. Exact same data, but expressed as a sunburst diagram. And you can see taxes. So we're nearing the end. Let's talk about some takeaways. First of all, accounting informs us of how much we have. Bookkeeping is the practice of tracking transactions as we go on. Double entry accounting requires balanced transactions. Ledger conveniently will tell you how much you're off whenever you are not right. And then you can figure it out from there. Think of it as like a red-green refactor cycle. You save it, run it, it'll tell you you're wrong, and you go find the problem, put it down, it'll still tell you you're wrong, go double check things again, and then eventually it'll tell you you're right whenever it spits out the right information. There are many tools. Some are paid, some are free, each with different strengths and weaknesses. However, Ledger is the most well-known plain text accounting tool, and there's this whole ecosystem and community around it. People are always willing to help. I have never had any shade thrown at me in the Ledger or IRC room because I was asking a stupid accounting question. As I said, I'm a student of many disciplines. Accounting is just one of them. For we geeks, text lends itself easier to management. Manual entry may seem tedious, but ultimately it enables the most intimate knowledge of what's moving around inside of your system. Lastly, Ledger enables you to use the tools that you're most comfortable with to manage your finances. Hopefully, text editor, make, geek things, techie things. Is Ledger the best? There's lots of different ways to do it. It works great for me. It works great for the organizations that I manage. I'm able to, one of the things we're planning to do for the Code and Supply Scholarship Fund is automate the release of our finances on every single transaction. We'll be able to publish a website that shows our entire transaction history. Whatever you do, use the tool that is best for you. I think Ledger is pretty great. I think all of you will enjoy Ledger and after you get over the initial learning curve. But ultimately, you want to do this kind of accounting so that you're better able to control your personal finances and understand how your money is being spent, how you're spending your money, how your money is helping you make money. So go forth and save. Dog tax. Every now and then I'll bring my dog in here. You can get me on those things. And here are some places to get some more information. plaintextaccounting.org is the site that I showed you. Subreddit that I created because the old Ledger subreddit had been taken over by Ledger, the cryptocurrency. And Ledger Tips is a great Twitter account run by the same folks that do plaintextaccounting.org, and they've got all kinds of stuff. They retweet me a lot whenever I'm talking about Ledger. Ledger chat, and then the link to these slides. That's all I got. I think we're gonna kill the stream and